afternoon. I am trying again with a different program. Funny enough, it's the Xbox, Microsoft Xbox, whatever recording thing. So maybe some of you guys know how to do this more than me. I don't know. Anyway, we're going to go back over looking at ledgers. So I'll just point out, first of all, we just came from doing journals. And in terms of the accounting cycle, journals, you journalize transactions and then you move on to the ledger. And that is what's called posting to the ledger. So this is the online textbook. It's just a newer version of the one that we're using, newer by 7 or 10 years or something like that. Anyway, I'm going to go through. So we're used to seeing this here so far, this T account, but I told you that the T account would soon become obsolete and we'd be using ledgers, and that's what I'm showing you today. So you have these different transactions, right? So we can see here on November 1st there was a $2,000 debit in the cash account. We don't know the other side because we're not looking at the journal at the moment. And then on November 3rd there was both a debit of $75 and there was a credit of $150. On the 5th, there was a debit of $100 and a credit on the 6th of $200. So when you add these together, or more, find the difference, you get a balance final, a total of $18.25. So we know how that works because we've been doing that. Now the ledger looks like this. You'll notice we're going to do this with me writing as well with classics. Examples, but I'm just showing you in the textbook first. So here you can see the account. You have cash. Cash is account 100 according to the chart of accounts, which I'll show you in a minute. I've discussed that as well. There's your date. So we've got 2020, 2019 I guess would be, but whatever it is, 2000, and then the month, short form, and then the date. So the first. Now J1 is referencing, if you remember, the page number of the journal that the transaction is located on, and here you have a debit of 2,000. So this is the same as that one right there. That's the same thing. So 2,000. This is always going to be DR because this is a debit balance account, and it's got a balance of 2,000 now because this was the first transaction. There's no forwarded balance or anything like that, which we'll look at in a minute. Next, on the 3rd, you have the $75 debit, also journal 1, page 1 of the journal. Adding 75 to there, you get 2,075, same thing as that. And then you've got the $150 credit, and that drops your total to $19.25. On the 5th, on the 2nd page of the journal, in this case, now that would just depend on how many transactions you had on the journal. It's a $100 debit, increases the balance. On the 6th, you have a $200 credit, which decreases the balance. So you can just see this isn't running total on this side. Okay, and down here's the chart of accounts. So I put that up before where we have our asset accounts all being 100s, and we're not going to stick to this, the truck has to be 142, for instance. These are provided in some questions, and you just follow that particular chart of accounts that they have. But cash is 100, and accounts receivable be 101, 102, 103. That's pretty standard. Liabilities, accounts payable starting at 200, and then 201, so on and so forth. Owner's equities 300, and drawings 301. Revenues starting at 400, and expenses starting at 500. Okay. All right, so this is now going to show you the direct translation from the journal entry. So here you've got a cash sale. You can see sold services to R. Hines for cash, sales slip number 1. So that was on October 1st. Posting reference is 100 because that's the cash account. And then you've got a $900 debit and a $900 credit to the sales account. So they're looking at this posting reference of 100. You go to the cash account, which is 100. This occurred on page 3, as you can see, so it's J3. So on the first J3, $900 debit, and it increased the balance that was already 1,000 by 900 to be 1900. Okay, so that's what that looks like. Okay, again, this is just showing all of these accounts that are listed here in the journal. Cash, 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 cash. Those will all go to the cash account. They'll all be on J12, page 12 of the journal. You'd have to go to see this whole transaction. If you're not looking at the journal, you have to look at both the cash account ledger and the sales ledger. Okay. This is an example of a ledger that, so this is from this one here. So you've got your J12. But I'm just going to point out here is they've got a forwarded balance. A lot of the times we're not going to do that, but forwarded balances meaning there was a balance before you started this transaction or any of these transactions. So if you're coming out of an accounting period or something like that, or if you're going from one page of the journal to the next, you always have to start off with a forwarded balance. So forward, you get a check here because there's no account with a forwarded balance. It's just moving from one page to the next. There's your forwarded balance from the bottom of, I would assume, the previous ledger. Okay, same thing. There's another type we'll look at in a second. Here is an opening journal entry, which we've seen already. That's the opening entry to put all the accounts together. And this is how you would set them all up so they've got all their balances on there. Okay. Now, what does that look like for ledgers? So we've seen this. What does it look like for ledgers? It looks like this. Same kind of thing as the forwarded balance, except for this time it's called an opening entry. And you are just literally assigning the balances that are the opening balances for those accounts. So when they start their business, for instance, here they have $4,000 cash, they have $5,000 worth of equipment, and they have a truck that is worth $20,000. Bank loan of $15,000, and the capital for K. Schmidt is $14,000. Okay. This was what I was talking about with the forwarded balance at the bottom. We're not going to really worry about that at this moment, though. Okay, now I'm going to go to our own examples. So in the last video, I had these journal entries. Make this a little bigger. These journal entries here. Keep adjusting. Good. Okay, so these journal entries here. So basically what we're going to do is we're going to transfer these over into ledger accounts. We're not going to worry about the forwarded or opening balances or anything like that. We're also going to call this, let's just call it J3, or page 3, just for something. So we're going to start with October 1st in the cash account. So we need to have our account, which is cash. Cash account is 100. Okay, and we are going with 1,000, October 1st. Okay, there's $20,000 debit. Notice there's no particulars, by the way. Posting reference J3, right? Because we have page 3, and it's 20,000. Again, DR, and the balance is 20,000. Okay, no particulars. Never particulars there. Next one is cash from this transaction is a $16,000 debit on the 4th. So we just have a 4, and it's J3 again, and it's 16,000. 16,000 adding on DR again makes that 36,000. The next one is a cash debit of 2,400 again on the 4th. Still J3, 2,400. DR, that's 38,400. Okay, and then the last one here, we've got a credit of 5,000 We're not going to do this one because I don't have enough space on this particular one. So credit of 5,000 on the 7th. Okay, 7th, J3, and that's a $5,000 credit. Still DR because of the type of account, and then we subtract this time the 5,000. We end up with 33,400. Okay, what other accounts do we have to have? So we don't have any other type of asset account, so we'll go to liability accounts, which we don't have any. So next one is the capital. So we've got our Johnson Capital, and that one is 300. Okay, and then his, that is the very October 1st. So again, let's do our date, October 1. That's a $20,000, so posting reference is J3. It's a $20,000 credit. Now it's credit because this is a capital account, right? So it's a credit balance account, and our balance is 20,000. Now there's no other entries for that one. So the next one we're going to do is the refreshment sales. No, ticket sales, sorry, that's the 400. Yep, ticket sales. So here we've got ticket sales, and our account number is 400. Okay, so that happened on the 4th. So once again, October 4th. Posting reference J3. And again, so ticket sales is a revenue account. Oh, that looks terrible. That looks like 900. 400. Oh my goodness. 4. Oh man. Let's get rid of that again. Okay, 400 right there. Alright, so that's a $16,000 credit. $16,000 balance. Okay, because ticket sales, like I said, is a revenue. Revenue account increases the capital, therefore they both increase on the credit side. And then we have, what's next? We have refreshment sales, 401. So refreshment. Account number is 401. And we have, whoa, I don't know what that was. We have, what am I doing? Our date, and it's October the, for the reference one, refreshment, sorry, it's the 4th. 4th, they sold $2,400 worth of refreshments. Still J3, balance 2,400 credit account because again, that is a revenue account, matches the capital. And the last one we have that we're going to do is the film rental expense. So we've got film rental expense. That one's listed as account 500. And on the 7th, we have $5,000 payment there. So 20 October 7th. J3. Okay, same page. And now expenses, it's $5,000, I remember. Expenses are opposite to the revenue account. They actually take away from the revenue account. So that is $5,000 debit. Right, this is a debit balance account, and so therefore your expenses have, or your film rental expense is $5,000. Okay, so that is that. In terms of looking at how that works. There are ledgers for every account, so I have another page here I could put down all the other ledgers. They do go in order in terms of numbers. right? So if we had liabilities account, they would go before the capital account, for instance. Okay. Now, what's the last? This is, as I said, the online textbook you can get through Pearson. Well, supposedly, not everybody's been able to do that. I am going to go back to the course page just to remind you where you're actually can get your information. So that's the wrong course. Just waiting. Tick-tock. And still waiting. I just gotta wonder what it's like in terms of difference. You know, now if you're listening to this, you're, I guess, bored at home doing something, as opposed to bored staring at the front of the room, or I don't know, more entertaining possibly. Oh look, I got an email from somebody. I gotta check that out. All right, that's for your messages, by the way. That's where it's gonna pop up if you use D2L. Okay, so let's go to the course. Excuse me. This is painfully slow. I don't know why it's going so slowly. Okay, so I'm just reminding you. So there's the videos you can see on the announcements. So journalizing one worked fine. The last one for ledgers, for some reason it deleted half of it. I don't know what happened. So I'm going to post this one instead. And then just again, so reminding you through the content where you can get your stuff. I am shocked at how slow this thing is going. Maybe this is lightning speed for some of you, I don't know. Okay, so under course information, sign reading and chapter questions, it'll bring up a PDF whenever it feels like it's going to do that. And boom. Okay, so you have all your questions. So the journal was what we were doing, page 112. Ledger, page 131, with questions and exercises. If you don't have your textbook, then please let me know, and I can send you pictures of the online textbook if you can't get that from Pearson Canada. Yeah, it's not the same exact questions or whatever, but it's the same idea. It hasn't changed that much. In terms of unit and notes, right? So we're on unit 6 ledger. So there's your note, and there's your template for ledgers. Moving forward, we're obviously going to do different topics, but we're going to have to find a different way for assessment through assignments and stuff like that, because obviously tests aren't going to work exactly. But anyway, hope that was informative. If you have questions, send me an email. I'm also working on, possibly having like a drop-in office hours type thing for the class, so we'll see how that all goes. Alrighty, thanks. Bye-bye.